Ladies and gentlemen, welcome back to the channel. The markets are ripping today, and for no real obvious reason. I could tell you it's positioning from a lot of tax loss harvesting that happened at the end of 2022, and that makes sense to me, but it's not definitive. There has been very little that has actually happened today, but the NASDAQ is up 1.58%. I could also say that 85% of the time, if you have a down year, like we did in 2022, the subsequent following year is positive and substantially positive at that, especially when you're talking, the S&P down 20% for 2022. The next year tends to be pretty good. So that is maybe what. Ladies and gentlemen, welcome back to the channel. The markets are ripping here today for no obvious reasons. Although I could tell you that statistically speaking, if the S&P 500 closed down 20% in 2022, 85% of the time you're going to see a green year the next year. So that's statistically in our favor to have a positive 2023. And I could say a lot of people tax loss harvested in 2022 towards the end of the year, right? The last 2 months. And now they're buying back those positions for 2023. Both of those things make sense, but it's hard to tell. There has not been anything that has really came out today that is bullish, that warrants a 1.5% rally in the NASDAQ. So I think that's what we're going to go with for today's video, guys. Nonetheless, we got to talk about AMC because AMC is up today, and we do have important catalysts coming tomorrow like Fed Jerome Powell that could shake things up a little bit, guys. So let's get into it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and let's get into it. So first things first, Fed Jerome Powell will be speaking tomorrow, I believe early in the morning. This isn't even on the economic calendar, so you're not even going to see this come up. So it might be a surprise to some people, but he's supposed to be speaking early in the morning tomorrow, and depending on what he says, could definitely move the markets. We heard from one other Fed speaker today, which is not a voting member, so it's not all too important, but they basically reiterated the same thing that Bullard, Kashkari, Bostic have been saying ever since the jobs report came out, that this really doesn't change anything, that they still are on the same path, even though you did see the basically raises going down in that jobs report, guys. So that's going to be a big catalyst tomorrow as far as actual economic data, as far as catalysts are concerned. You do have a 3-year bond auction that could move around the bond market, and that will move around the stock market at least a little bit, but you don't have anything too major. And then on Wednesday, you don't really have anything as well. And then on Thursday, that's where you get to CPI. And then Friday, you're going to get to what is it again on Friday? That we have Michigan Consumer Sentiment Survey as well as the bank earnings. So what the markets are really going to pay attention to from this point out is going to be earnings and economic data. Data points like CPI will be very, very important. And like we talked about in the last video, there's kind of a danger there with CPI, at least this time around, because expectations are so high that inflation just plummeted in December. If it did not, that's going to be a problem. So I want to be a little bit careful positioning to the long side right here and right now. If you guys want access to all of my trades in real time, we just did put out an alert here today targeting the NASDAQ to the downside, obviously because it's up 1.5% today, and there are some major catalysts coming that is really due to cause some fear in 2023. We really haven't seen that fear in 2023. I think it's due, and I think it's coming here very shortly. Link down below in the description of this video if you guys do want to join that. It's a great tool to have, but it's not an end-all, be-all. It's not your your golden shovel, right? It's not that, but it is a great tool to have and a great community to be a part of, if you guys want to be a part of it. Now, let's talk AMC more specifically, because AMC stock is up about 3% on the day, and it's nothing too major, but it looks like you're still in this bottoming formation, and we just did get another relative strength index bullish indicator. So let's go ahead and pull up the RSI and see what is going on. And we're now above 30. We're at 32.50. So what this means is you're statistically not oversold anymore. This is indicative of a bottoming formation, and the neutral level is around 50. So if we move up to that neutral level around 50, you're going to get a pretty big move to the upside, and a pretty big move to the upside from here could be around that $5 to $5.50 range, and I think that could happen with very little notice, and it could even happen on a day where the markets are down. When you're seeing these kind of bottoming formations, when you're not continuing to flush to, new low after new low after new low, you could look at something like Tesla, right? That is definitely, maybe after today, it's starting its bottoming process, but I mean, the stock was just literally going straight down. Like, this is different. This is not a bottoming process. This, a little bit right here, may be a bottoming process. You did break out above the 5-day moving average, so that's good for Tesla as far as Tesla is concerned. But with AMC, it's been flat. The bottoming process is definitely here. And once you get that bottoming process, you tend to get a rally to the upside, and the further we get away from 360, the better. 360 is really going to be the next level of support, and this is a multi-year support going back to 2021 around February, when we went through that rally, obviously in late January, and then fell down. You fell down to about this 360 level after obviously the adjusted price of the stock after stock splits and all that we've seen over the years. So this line right here is going to be very important and a really respectable support level if we get down to 360, and that could be a reason why we're in this bottoming process already, because we're very close to hitting 360, and typically you don't have to hit those multi-year support levels to actually get a bottom and to start seeing that bottoming process. So from a risk to reward ratio right now with AMC, guys, you couldn't have it any better. Like, this is as good as it gets on a risk to reward ratio. You've already dropped. You've already seen the pain. The volume is low, and you're at multi-year support levels, but you're holding up. You're not even testing those technically at all yet. So I think the risk to reward looks really good for some long positions, especially the options, guys, because the options are very cheap. And don't be confused. AMC stock has very high short interest and cost bar rates. This stock could rally very aggressively in a short amount of time. Dude, come on, guys. Don't be fooled by AMC. AMC is not this docile creature anymore. It is a beast to be reckoned with on those good days. So I do think you don't want to get too pessimistic here. I think you do want to watch that 360 level on the technicals, but I do think you want to be long in AMC stock right now. If you've been someone, if that didn't even come out right, if you have been someone that has had shorts or puts on AMC, in my personal opinion, not a financial advisor, working to become one, but not yet, and even if I was, I could not give you financial advice, then you just don't want to be short anymore on AMC, and take that for what you will. You've squeezed out whatever you were going to squeeze out of AMC, and at this point, this looks like an accumulation phase of, specifically, if you're playing the options, I want to go out 6 to 12 months on these options, because I don't know what the next month is going to hold for the stock market. You have CPI, you got Fed Jerome Powell tomorrow, you got tech earnings, and the problem with earnings specifically is certain stocks like Tesla or Facebook, right? Meta, those stocks have really seen their expectations dialed back a lot. Like Facebook, not expected to grow nearly as much as they were for last year, looking at 2023, right? People had high expectations for the stock. That's why the stock dropped so much. Same thing for Tesla. You're seeing those expectations being reset, and that's good for those two companies. That means they probably won't fall as much when the markets fall, but, for Apple, for Microsoft, for Google, for Amazon, those expectations have not come down to where they probably should be. So that could mean more pain in the short term for the markets. And however that affects AMC is really a toss-up. If that's going to be a bullish thing, if that helps to drain the liquidity to get shorts to, cover on their short positions, that's a possibility. Or it's a possibility they all just double down on short positions, right? Those are the two possible outcomes when you're talking about tech earnings, when you're talking about a weak market at some point in 2023. And I do think it's going to be in the month of January. In the month of February, you see that pain. That's why you do want to go a little bit further out with those options. But the premiums, juicy. They're so cheap. It's almost stupid not to have, $100 or $200 on AMC options when they could easily net you thousands of dollars if that rally does come over the next 12 months. That's a bet that I am willing to take, ladies and gentlemen. Let me know down below in the comment section how you are trading AMC, or how you are positioning or investing in AMC as of right now, guys. We are going to get into the Stocko tracker data here briefly, and then we're going to look at the Ortex data as well. So for this Friday, you're looking at about 7,300 calls that are in the money and about 33,000 calls that are out of the money. Put option activity even less, 18,000 puts that are in the money, 9,200 puts that are out of the money. Now, if you look to January 20th, that's where things get a little bit interesting, and you could be setting yourself up for a gamma squeeze. Yes, guys, when you actually take a look at this option expiration, it looks primed for a gamma squeeze, primed for that squeeze. Now, if you look at the calls in the money, 1,600, get that. Calls that are out of the money, 357,000. Puts that are in the money, 143,000. Puts that are out of the money, 74,000. So when you have so many puts out of the, calls that are out of the money compared to into the money, you guys already know the deal with that, right? Large number compared to a small number that are in the money. If the stock moves up, there's a lot of fuel on that fire to really see a big rally, to see that gamma squeeze. But at the same time, if the stock is moving up, these puts that are already hedged for, aka market makers have already shorted stock to account for these puts that are in the money, and 144,000 is like 14.5 million shares that are short currently by the market makers just to oblige for these puts. If you start to see the stock go up, you're going to not only see calls go into the money, but you're going to see those market makers start to buy back some of those shares that they shorted as these puts run out of the money. And that's where you can get a massive event, because 357,000 calls, let's imagine they all went into the money. That's 35 million shares that would have to be bought by the market makers. 143,000 puts, if these went all out of the money, that's, like I said, 14 million shares that would have to be bought by market makers. That's almost 50 million shares that would have to be bought next week alone if the stock did go through a really big rally. And obviously, I wouldn't expect all of them to go into the money, or all of the puts to go out of the money. But even if a fraction of them did, you're talking millions of shares. You're not talking hundreds of thousands. You're talking in the millions, guys. So something to be very, very excited about. Now, if we take a look at the Ortex data, we'll go ahead and refresh this page to see if anything did update in the couple minutes that we were talking. Does not really look like it. Besides the shares that are available, now we're sitting at 0. Somebody did take out about 75,000 shares to sell short. And the last reading we got from Interactive Brokers on the cost of borrow rate was 92.5%. Cost of borrow average 240.66%, cost of borrow max at 255.66%, and cost of borrow minimum 217%. Obviously, at this point, if you can't tell, these are not numbers that are glitched, right? This is not a glitch in the system. These numbers are really that high. They're in the hundreds of percents for the cost of borrow rates, and that obviously, like you guys know, puts a lot of pressure on those shorts with short positions already existing. Now, taking a look at the live short interest of free float, that's sitting at 21.65%, up 0.5% here today, and 111.62 million shares that are sold short, 625,000 of those shares that are sold short here today alone. So I think You know, when you put all of this together, put the option activity together, put the fact that the stock is in a bottoming formation, you look at the cost to borrow rates, where everything's sitting at, you're in for a very big rally at some point over the near-term future. And my near-term future, guys, just so you know, is like 3 to 6 months. That's near-term. In the grand scope of investing, like near-term is like 1 to 3 years. Mid-term is like 5 to 10 years. Long-term is like 15 to 50 years, right? Relatively speaking, 3 to 6 months is very short term, and that's why I kind of want to trade the options with that, you know, at least 3-month outlook. But at the bare minimum for me personally, I'm gonna go 6 to 12 months on my trades. If you guys want access to all of my trades in real time, link down below in the description of this video. Nonetheless, guys, that's pretty much gonna be it as far as earnings. And one thing you definitely want to watch out for, it's Bed Bath & Beyond that does report earnings tomorrow. Depending on what they say, that could definitely move around AMC. It could move around the whole meme stock sector. And maybe it's to the positive, maybe it's to the negative, hard to tell. Maybe it doesn't affect AMC at all, but that's something to definitely keep in mind and be on the lookout for. If tomorrow we're just red for no reason, or like really red for no reason, it's because Bed Bath & Beyond said something very bad. Now on Friday, just to run through these stocks again, if you guys have not seen, these guys will be reporting earnings, and this will be big for the markets. But you also have CPI on Thursday on the 12th, so it's kind of going to be one of those things where it could help the markets fall, it could help the markets rally depending on the bank earnings, but I don't think it's going to offset the market's reaction from CPI on Thursday. If CPI on Thursday is just very bad and we miss expectations and the markets fall a lot, even if banks have good earnings, I don't think it's going to be something that will save the markets. Now, if they would have bad earnings and the markets did bad already, well, you guys can infer what that would mean for the markets. Now, you have Bank of America, United Health Corporation, JP Morgan, Chase & Co., Citi, Wells Fargo, Delta, BNY Mellon, BlackRock, and First Republic Bank. Like I said, the banks will be important because we get a glimpse into the state of the consumer, guys. So that is it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.